Now, this is a strategy that I use at night. Everyone may not be available to trade during the morning time due to whatever it is on their schedule. So if you can't trade in the morning, you have something to do, or maybe you just miss it for whatever reason. If you can get to your computer at 7 o'clock at night, I'm on Eastern time. So whatever 7 o'clock is to you, that's when I sit down and look for a trade at night. The first thing that I do is go to the 15-minute chart. All right. And I like to zoom in on my chart. I like to see what's really going on. Let me show you why real quick. So this would be the 7 o'clock, the 7 p.m. candlestick right here. For this strategy, we want to mark the low and the high of the 7 o'clock candle. See, it doesn't look like there's a wick right there, so I would, place the line right there. But if I zoom in, we see there's a teeny tiny little wick right there. So that's going to be the high. All right, so this is the high. And I was off, so let me move this line up. And this is the low of the 7 p.m. candlestick. So this is the range right here, the 7 o'clock range. Let me do one more thing. We're going to make this line green for our buy. And that's the high as well. And then we're going to make the bottom line red. That is the low. And that would be for us to go short. All right, so let's zoom back out. So we're going to mark that on the 15-minute chart. Once that is marked, we go back to the 5-minute chart, and that's where we're going to make our entries at. All right, so now we're on the 5-minute chart. Let's zoom in again. If we look right here, ATR, it's 49. Pretty good. So I'm going to go for 40 ticks. So what I'm looking for is a break above the high for me to make an entry and go long to go up, or a break below the low for me to make an entry to sell and go short. Now, depending on what kind of trader you are, if you're a more aggressive trader like I am, if this candlestick closes above the high right here, somewhere up here, closes, and it's a good size candle, I will go ahead and place my entry at the top of that last candlestick where it closed at to go long. If you're a more conservative trader, one thing you can do is wait for a break above, and you want it to close above the high. You want the next candlestick to come back down and retest this high. And then you want the following candlestick to come back up above this high and close above the high. And then you can make your entry on that one. Same thing for the low. So if you're more conservative, see how this one just came down. Now, if this candlestick closes below the low range right here, you will wait for the next candlestick to come back up above this low line. And that will be considered a retest. And then the following candlestick, you will want to see it close below the line. And then that's where you will make your entry to continue going down. So I'm going to speed the time up. All right. This is a good close beneath the low. That's good for me. Now, like I stated, since I'm a more aggressive trader, I'm going to go ahead and make an entry. I'm going to go short for it to continue going down for 40 ticks. One more thing. As far as the candlestick closing below the line or above the high, below the low, above the high, I'm looking at body. The wicks don't really matter. I'm looking for body. All right. So I'm going to make my entry at the bottom of this close. We are going to go short. All right, so here's my stop loss right here. I'm risking 20 ticks to make 40 ticks, 2-to-1 ratio. Got it. And that's it. Now, like I said, if you're a more conservative trader, you could wait for this one to close, wait for this candlestick to close, and see if it come back above this line. So it didn't come back above, but it's still a bearish candlestick. All right, let's go to another day. So we're going to start on the 15-minute chart. I'm going to go to the 7 p.m. candle, 7 o'clock. And we're going to mark the high and the low. Zoom in so I can see. Got this small wick right here. Let me go ahead and mark that red for a low. And then as you see, there is no wick right here. And this is after zoomed in. So I'm going to just place it at the top right here. And I'm going to mark this green for a high. So keep in mind that all of this is done on the 15-minute chart. You mark your high, you mark your low of the 7 p.m. candle. And this is the range right here in between the high and the low. So once we do that, we go to our 5-minute chart. And we're going to wait for a break above the high or a break below the low. You can wait for a retest down here or up here, following with another close above the high to go long, or another close below the low to go short. All right, so this candlestick closed in the range. So we're not even going to pay attention to that. Remember, we want to see bodies closing above the high or below the low, not the wicks and nothing in between. Anything in between is invalid. All right, so this is our first break above. We closed above this high. Now, if you're a more aggressive trader, you can just place your entry at the second close if this doesn't come back for the retest. So let's see. So we have two closes. This will be our second close above the high. I'm going to go ahead, put my entry at the top of that close. I'm going to buy to go long. ATR is 75. So I could actually go for at least 50 ticks, but I'm going to keep it at 40. So I'm risking 20 to get 40. There you go, 40 ticks. And that's why I say if you're a more aggressive trader, you can go ahead and put your entry after that second close above your high. If I would have waited for a retest, it never came down and retested. So I may have missed that, but it's all user preference. If you're more conservative, you can wait for your retest. If you're more aggressive type trader like myself, let that second candlestick above, second close above your range be your confirmation. And that's what I did. And we got 40 ticks from off of that. So let's go to the next night and we'll go over the strategy again. All right, so first things first, we want to make sure that we are on the 15-minute chart. We are looking for the 7 p.m. candlestick, which would be this one right here. So let's zoom in a bit so we can be sure that we get our lines right. So we're gonna mark the high. This is the high of the 7 p.m. candlestick. I'm gonna change this to green to represent the high and for the buy. And then we're gonna mark our low, which is the bottom of the wick in the 7 p.m. candlestick. And I'm gonna mark this one red for our low and for us to go short. All right, so this is our range. Always do this on the 15-minute chart. Once you get done with that, head over to the 5 minute, and that's where we're gonna make our entries at on the 5 minute chart. All right, let me zoom in a bit. All right, so we're looking for either a breakout below the low, a retest to come up above this low and then back down, followed by another close beneath the low in order for us to go short. And then we're looking for the same thing if we get a high. So if we break above this high, we're looking for a close above the high, a retest, come back below the high, and then another close above the high. Then we make our entry. Now, if you're a more aggressive trader like myself, let's say that this candlestick closed below the low, like way down here or something. If the body was way down here, I would probably go ahead and enter in off of the second candlestick that closed beneath this instead of waiting on that retest. So if it's a good enough trend, you feel like it's a good enough trend in the direction that it's going, you can make your entry off of that second candlestick and not wait for the retest. So it just depends on the situation. It just depends on the market condition during that time. I'm gonna speed the time up a little bit. All right, this candlestick closed in the range, so that is invalid. We're not even gonna worry about that. We're looking for bodies that's closing below the low or above the high. Our ATR is at 89, so that's pretty good, but I'm gonna only go for 40 ticks. The higher the ATR, the more ticks that you can go for your target. But I'm gonna just keep it at 40. All right. So this candlestick closed in the range. This one closed in the range as well. So these candlesticks are invalid. We're not gonna worry about these. We're only looking for bodies that close above the range or below the low of the range. So above the high, below the low. Anything in between that's in the range, we don't worry about. This one closed in the range, we're not going to worry about it. All right, so this one did close above the high of the range, but that's not enough body for me. Yeah, that's not enough body for me. So let's see what this candlestick does. This candlestick did close above, but it closed as a doji. And remember, doji candles mean indecision. So the market doesn't know if it wants to continue going up or if it wants to change and come back down. So I'm not going to mess with that. So in this certain situation, I'm going to wait for a good size body, a bullish body to close above here. All right, this would be the retest. We did come below. All right, we closed above, but I'm still not too sure. That's not enough body for me. Same with this candlestick. We did close above, but that's not enough body for me. I need big bodies above my highs and my lows. All right, so now we're getting somewhere. This is enough body for me. So I'm going to count this as the first break. Technically, this would be the first break above the high, but then it was followed by this doji candle and these small bodies. So in my book, I'm resetting. So this will be the first break. This will be the retest candlestick that we're on right now. So let's see what the following candlestick does. See where we close at. All right, so this candlestick closed bearish. It's in the range. We're not going to worry about that. So if this one closes above our high, that would be our second close above the high. And I will make my entry and go for a long. So let's see how it closes. That's what I was waiting for. Okay, so this is perfect. This will be our second close above the high of the range. So I'm going to make my entry right here at the top of the close. And I'm going to buy. I'm going long for 40 ticks. I'm risking 20 and going for 40. So it's a 2-to-1 ratio. So hopefully it'll tap us in. All right, so we are in. We're risking 20, going for 40. ATR is 71. So that's pretty good. We could actually go for more than 40, but there it is. So just a quick recap. All of this right here, starting from the 7 o'clock candlestick, was inside of the range. All of these bodies are inside of the range. These were invalid. We got this first break above the high, but the body is that's not enough body for me. So didn't really count that. So following that candlestick, we had this doji. Doji means that the market is in the indecision. It's indecisive. We don't know what they want to do. If we want to continue going up or come on down. Next candlestick, small bearish body closed above the high, but that's a small body. Next one, another small body. So I didn't even count these. This one closed in the range. That's invalid. We got a big bullish candlestick that closed above. That's what we restarted our count. So we counted this as the first break above. First valid break above. Came down, retest, closed in the range. Came back above. Good sized body, almost the same size as this one. Closed above, made our entry right here because we consider this one to be the second close above the high of the range. Went on up 40 ticks. So for the most part, it's the same thing. It just depends on the market condition. And I'm glad that this one played out like this so we can see that sometimes you just may have to wait. Just be patient. Wait for the right candlesticks to come above your high of the range or below the low of the range. And just keep in mind that anything that is in between the range is invalid. Don't worry about any of that. We want to look for big bodies closing above the high or big bodies closing below the low.